All right. How's everyone's week going so far? It's Tendy time. Let's go Spac hunting. Let's cue it up. Let's go to the Spac center of Reddit and let's see what's popping that no one else is talking about yet. Don't worry, we're into the GME play too. But I got way more than 34 karma. Come on. We're in the GME play also, but while everyone's just, preoccupied over there, let's go find the other plays that no one's talking about yet. Let's see what just got announced. Maybe. We making some money today though, folks? Making some money. Give me some ones up in the chat. If the market ain't going either way for you right now, we want to make some money at the end of the day. Give me some twos in the chat. And if the market has started off evil for you and you're losing some money, give me some threes up in the chat. We're looking for the bread right now, Les. Let's figure it out. Oh, what's going on, Brogan? How you doing, brother? You read today? Man, don't you have some open door? Open door is way up. eToro. Let's go figure this one out. What's going on, JC? How you doing today? Looks like you're making money, so you gotta be good. Alright, eToro. I don't know much about eToro. FACV. FinTech. Okay. Ooh, nice website. Alright, if you haven't already, before we get going over here, please smash that like button, smash that subscribe button, and ring the little bell next to it so you get notified every time we drop new videos, every time we go live over here and we're making money up into his house, which is every single day the stock market's open. I gotta make sure I'm not on Wi-Fi over here. All right. All right, FAVC, I think is the name of it. Yeah, FACV. FTCV. Oh, so this one's already started running a little bit. Well, it was being rumored back here, and then it got announced today. You can see what happened. So it's run a little bit, but it still hasn't run very far at all. Let's see what's going on, though. And as always, folks, remember, name of the game with SPACs right now, because you don't really see this opportunity very often, is buy warrants. Warrants are the way you're going to lever up. Learn warrants first. Learn what your rights are with them. Thank you, Savvy. Great to see you as always, my friend. Learn warrants, though. Learn what they give you the right to do. Learn what your risks are with them. Learn what your rewards are with them. Learn how you can lever up with them, which is what I do with them. It's a little bit less risky than options, in my opinion. You have a longer time span, and you can own those shares outright without them hitting a certain strike price. You just have a long time to figure out if you actually like the company and the direction they're heading, and it's going how you thought it was going to go. And if not, you can sell those warrants too for a gain most of the time. So that's how I levered up my portfolio so far this year. Looking to lever up way beyond that in the coming year. And with SPACs, you have the opportunity from almost all of them to buy warrants on them. So you can get in, even if it's at $13 today, you can get warrants for like $1, $2 each maybe. I'll look at some warrant prices after we look at this one, whether we're going to buy it or not, or whether I'm going to buy it or not. But that's the name of the game here, folks. Learn warrants. I'll put up a video at some point on my channel as I get more and more settled in over here. I'm just working on a bunch of stuff right now. For y'all. Obviously, if you want access to the sheet on my website that you'll see me working on today, the instructions are in the description below so that you can get access to it for free. For now. If you get in right now, you're never going to have to pay a single penny. If you do wait, though, and you want to, for whatever reason, not take advantage of the free offering, a lot of due diligence on there, a lot of valuable information for you to make some good investment decisions around. No harm, no foul. I understand that. When I put the paywall up, though, I don't know what it's going to be. It might be $10, $20. Whatever makes sense, depending on how much my servers cost as more people start to use it. But we've gotten a pretty decent amount of signups already. All right, let me figure this out. I'm going to pull this over here. I'm going to make it smaller. Oops. That way I can start adding stuff on there. You end up having a not SPAC day, AI, C3 AI. Brogan, what's the deal with that? I'm not familiar with them. This is going to be for FTCB. This is for eToro, FinTech. Alright, what do I want to do first? I want to do this, and get their stock price in there, get everything up to date, get us all situated, so that we know whether we're getting a good deal today or not. So we're always looking for good deals. We're not looking, there's a lot of these companies that I do like a lot. And if I'm not going to get a good deal for it, I'll wait for a day when I'm going to get a good deal on it. I'll put a target price on there, but I'm looking to buy it. I'll put a limit order in there. But if I'm not getting a good deal, I'm not buying. You don't have a fool walking into your store today. Oops, this is supposed to be over here. This will be 1071, so we're up today. Let's see. 120 stock, but beware of turbulence. I'm picking up CleanSpark. Okay, CleanSpark got TC in earlier. Also massive data and AI company, mainly applied AI, drop-in and go system. So I mean, you have my attention. Now you definitely have my curiosity as well. But what is the application for it? They just have customers that use their data, or what is the what's the application? I need to link them somehow in my brain. Trouble in the neighborhood. What's going on, my friend? How are you today? Okay, let's see. Transaction summary. Okay. Alright, I'm looking forward to it, Brogan. Alright, I'm looking for the transaction overview right now. I see their financials all over here, which is great. But we need to know the terms of our agreement. What are we buying into? Do we agree with their valuation? There we go. Transaction summary. Okay, so we're buying in. Oh wow, that's pretty high. Pretty high enterprise value. It's almost 10 times their 2020 revenue is what they're saying. Oh no, 2022 net revenue. Okay, let's look at it though. Where is our equity value? So yeah, they're valued at $9.5 billion right now. It's going to give us a equity value of a little over 10, 10.4. Boom. All right, what are we getting from the business? Yeah, I mean, some of y'all are some very early burner market traders, and we've been in there since shit. I think CleanSpark was at about like $8 or something. I remember taking out calls on it when it was sitting at like 9 and just wasn't running. And yeah, they've been in it pretty early. But y'all know me, I'm stingy with my bag. I don't add just anything. I like a lot of companies out there, but I think I've got 5, 6 companies in my bag at any given time. So we'll see. I'm trying to add to that, maybe get up to 10, but it's hard being an owner of so many companies. Got a lot to look after. Oh wow, we're getting a terrible deal here, I think. 2.4% is what the Spac shareholders are getting, and then we're getting 0.8%. Look at that. That can't be right. No. I meant 0.8. Oops. Yeah, so you're getting a terrible deal. I'm already not liking this. I'm going to brush through it pretty quickly. I don't like it at all. Deep green. That's the metal company, right? I do like the metal company. Yes, I do like the metal company. Trouble in the neighborhood. Trouble in the neighborhood. You got to give me a first name or like a nickname for you right now, because I can't keep saying all these syllables every time. And you're a recurring viewer, a true homie. So I want to be able to call you something short, quick, and sweet that you like that I don't come up with. All right, let's see. Let's catch up with Brogan real quick. No, I'm not doing SOAC. I'm doing FTVC or FTCV or something. This is eToro, so it's fintech. I'm not liking it so far. This is right here. This is what I don't like about it. Is we're only getting 2.4%. We're getting an insanely high valuation at 9.5, almost 9.6 billion dollars. Enterprise value after the merger completes is going to be almost 10.4 billion dollars. The market cap today is 411 million, but we're only getting a combined like 3.2% of the company. So when it's all said and done and the merger finalizes, even at $13.74 a share, you're looking at almost a $13 billion post-merger adjusted market cap, which is fucking insane. I mean, let's look at their numbers. Let's see if I'm being too quick to judge over here, but I don't know what kind of revenue they're going to be doing that's going to justify value this high. Let's look at their numbers, their annual P&L. They don't give us their bottom line though. All right, let's see. 2020, they did $605 million in gross revenue. Yeah, of course they are. Bunch of crooks out there. People don't know any better. That's what we try to do over here is educate, 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 and get more educated together. Make good investing decisions so that we can become part of this generational wealth transformation. There might be a lot of people who get short-term wealthy, but if they're not enhancing their acumen, they're not getting smarter, not becoming more sound investors, just as quick as they rise, they'll fall even quicker. So get smarter. If you're going to get money, learn how to hold on to it and not make bad investing decisions. All right, these are the projections now. Let's see, they take us all the way to 25. Okay, so we'll do 2021, 2023, and 2025. Let's see what our CAGR is going to come out to. It's our compound annual growth rate. I want to see if we're looking at a conservative growth rate, if we're looking at a aggressive growth rate. What are they projecting over here? That's going to tell us how believable it really is. We can make up that. That's going to be the subjective part of everything. Is this growth attainable? Do we understand how they're getting there? If not, maybe it's worth taking a closer look at if you really want to invest into it. Because what's the point of putting projections out there? I've put together these decks. I was just talking to one of our co-founders the other day from the first company I started. I helped start and raise funding for. We raised just a little under $1 million in funding. And we put together pitch decks for investors all the time. The point of them is to get investments. So even though you're supposed to be conservative and unbiased, it's always just loaded with bias. That's why I don't read through any of the bullshit minutia. And the projections are never conservative. Even if you've convinced yourself as a co-owner of a company or a co-founder of a company that they're conservative estimates, they're not. They're not at all. So that's why I always look to their CAGR, see how conservative they're projecting this growth to be. Because if it's over, some of these you look at are going to be 357%. Companies very rarely going to grow at that clip. So we're starting at 605 million today after 2020. And by 2025, we're going to grow to 48. We got 21, 22, 23, 24, 25. 5 years of growth. That's going to give us a CAGR that's pretty conservative, 33.32%. That is from 2020 to 2025. And then let's look at our total addressable market. How big is the pie that we're looking to capture? Some of these are really small pies, right? If I can capture 1% of I don't know, some of them, let's say 100 million. If I can capture, sorry, this is oh shit. If I can capture 1% of a $100 million pie, that's going to be $1 million a year. If I can capture 1% of a $1 trillion pie, that's going to be $10 billion of revenue a year. So I want to go for the companies that are going for a big pie and preferably that have a lead in capturing the big pie. I'm going to catch up in your DD in 1 minute, bro. Give me a second, brother. I appreciate it. Let me just go ahead and get these numbers down on paper for the fine people tuning in right now. All right, we got FINRA. It's the opportunity. $98 trillion. Total world wealth invested in equities equals $98 trillion. That is not your TAM, sir. Sorry. Yeah, I don't agree with these numbers at all. This is garbage. Look at this. I'm gonna pull the slide over here for y'all to see. Look at this garbage. You know, whoa. FTCV as the investing firm, they know better than this. They're just taking them they're taking them public because they need to take a company public. Essentially, they want to make their investors feel like they're part of a good fund. So they're giving them these extremely high. This is how I see it. You know, these are all raw opinions. So do your own research as always. But they're giving them this fucking absurd valuation that's 10 times their 2022 projected revenue. You know, $1 billion. So they're giving them a 9.6 billion dollar valuation. Absurd. They're giving them, that's going to give them a post merger equity value of a little over, it's like $10.5 billion already, because the price has moved to $13.74 the time we started this. And we're getting such a small part of the pie. We're only getting combined 3% of the pie. That's the price you see today. How many times is 3 going to 100? Divide that, or I'm sorry, take that number and multiply that by the market cap. You see, that's going to be the post-merger adjusted market cap. You're investing in a company that's already being valued at $13 billion. That's not even doing $1 billion of revenue a year. They've got these absurd numbers littered throughout the entire presentation, like that their total market opportunity is $78 trillion. No, the fuck it isn't. You know, it's, sorry, excuse my French. $78 trillion is the total world wealth invested in, you know, any form of equities, and they're saying 20% of that is for digital platforms. I don't even know if I agree with those numbers. They're bringing these absurd numbers to you. Exactly, savvy. So that's what I mean by these investor presentations. Do your own research. The market opportunity it's big, but it's not that big. So I'll need to find like a more concrete number, because I'm not putting $78 trillion on my spreadsheet. That's completely misleading. I'm going to get some competitors in here. I'm going to kind of brush over this one because I really have no interest in this company at all. I don't want to waste anyone's time. Multi-channel marketing strategy. Yeah, I would hope so. I'll get SoFi's TAM. They're literally identical markets, and y'all can see what Chamath put on there for their investor presentation, because he has to present it to his board. It has to get approved by everyone before it becomes anything. And you can see what he put on there. You can see what they put on theirs, and maybe that will ease some of the slander that comes Chamath's way. Like I said, people can hate on Chamath all they want. Y'all sit there hating. I'm going to go ahead and continue following my dude that I've been following for 5 years and has treated me well for 5 years. So I'll be cleaning up that money with him. While, you know, all the Redditors want to tear him apart for selling part of his shares of a company that he still owns 15 million shares of. Alright. Where's our competitors? Yep, URNM. Sure thing, JC. URNM. I had a couple in here as well that I needed to write down that I haven't already. I got to catch up with Brogan's DD that he did for us so generously. Um, social trading. They're not the only people doing it. Don't be blinded. There are a lot of people who are doing social trading right now. I need to find competitors. Your product is the same as everyone else's product out there. That's also a big room for concern when they're just pumping their product on this whole presentation. Not a whole lot of numbers. Doesn't look like they understand their competitors. And they don't want to share their competitors. Maybe their competitors have a big edge on them already. Yeah, isn't that crazy that IPOF is priced lower than them? I think IPOE. What's IPOE at today, Savvy? I can obviously look on here, but thank you, JC. Yes, yes, yes. If y'all haven't already, please, 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 smash the like button, smash the subscribe button, and ring the little bell next to it so you get notified every single time we drop a new video, every time we go live, and we're making money up in here, which is every single day the stock market's open, folks. Let's go Spac on. Yeah, there's literally nothing on here about competitors that I see. Oh, we got it. All right, let's put these on the sheet. Go get SoFi's as well. SoFi. IPOE. Oh, I didn't put one on for them either, because they didn't put one on there. What else is fintech that's like them? Apex Clearing, much different company. I'll find one for them. Maven Marketing Group, great to see you. IPO is at 1885. Okay. IPOF is supposed to be their biggest SPAC yet. Could be a good opportunity to get it if it still hasn't run course, because as soon as it gets announced, it's gonna pop. Oh, hey Connor, how you doing? Selected peers, high growth fintech. Let's put it in their words. And we're gonna do 1, 2, 3, PayPal. This is Adyen, Bill.com. Lemonade is blowing up actually. I don't think they're a competitor though. They do insurance. We're gonna do high growth international brokers. That's gonna be Utu, XP Inc. That's it. Oops. We're gonna do developed tech brokers. People are gonna get burned bad in this deal. I'll warn y'all now. Just wait on it. So nowhere on here that I actually see their real competitors. Alright, I'm gonna do this real quick. Well, let's start by getting that. This presentation link in there. And then let's look at eToro competitors real quick and see what the hell's going on over there, because it ain't, these are not their competitors. Yeah, I'm gonna go ahead. I'm just gonna add TD Ameritrade, MetaTrader, Thinkorswim, and E-Trade. Here's my list of competitors that they're afraid of. You got MetaTrader. You got TD Ameritrade. Oops. Thinkorswim. That trade. Oh, Scott, how you doing today? Legs feed the wolves. Congratulations. All right. I'm getting off this trash company. I don't really have much interest in continuing that any longer. Yeah. Let me get off and look up fintech. Alright, Brogan, I'm about to catch up on yours. Your DD. Got this trash presentation. I'm gonna go with 150 billion. We're just gonna put a ballpark out there. Alright, so we're gonna save. Now let me go catch up. No more time wasted on this company. Alright, Brogan, what we say? We said. Okay. Basically, they're fixing AI and more importantly, data aggregation and sales and marketing. They have patents to fix the dupe loop issue, consistent CRM infrastructure management issues. Alright, let me click on this article you sent. I'll pull it up on the screen so that we can all read along together. They link with AWS, Microsoft, IBM, NVIDIA, and Google Cloud as well. Okay. Thank you, Brogan. Let's see. Yep, Savvy, we do want to multiply, and we don't want to lose money. We lose money, folks, in investing. That is the golden rule. Don't lose. We're not here to gamble. Find great companies that you can hold for 20 years, leave your money in there, and watch it compound. That's the name of the game, folks. Continue watering those trees that grow for you. There's a lot of weeds out there. Learn how to cut the weeds. Learn how to avoid trying to water weeds. Find the good ones, the ones that need your money, that can grow and can grow you a lot of money as well. But if you go backwards, it just gets harder and harder to make money in this market. So to grow that much, you have to ask, what has changed? Why didn't they grow that much? Past year, you want the embarrassment of they have nothing exactly. URNM, I'll take a look at it in 1 minute, JC. $152 years from now, you're going to be loaded, Scott. Don't, yeah. Hey, Brogan, why are you playing with your options turned off? Or with your algo turned off? Oh my god, what's going on over here? Brogan, what'd you send me? There we go. C3.ai, the software company founded by software industry legend. Filed to go public. For his purpose in life is applying artificial intelligence to sales and marketing. Like, oh, and I can pick solid stocks without it. Got you. Okay. Thank you, Brogan. Hang in there, brother. Roll off the punches. You can pick solid stocks. You know how to pick solid stocks. Maybe not options trade. I'm not a good options trader either, but I can pick solid stocks. Or I'm getting better at it at the very least. Getting better. I got a 5-year head start on you, though. Came in with C3 ad called the secret sauce. Yeah, for a second, okay. sit here and manage options. They pay so freaking much. It's not about picking the right stock. It's about when you're right, which makes it hard. Exactly. That's how options trading goes, though, right? High risk, high reward compared to typical investing. What makes it very difficult is that, I'll pull up the chart if you want me to. Just what going backwards in your portfolio does for your portfolio, right? You need to make this much more now on the money existing in order to even get back to even. What's this ticker, Brogan? I don't understand it enough. This is something that's going to take way more than like a 5-minute overview brush over for me to understand it. This is way over my head. I understand AI pretty well, or decently well, I guess. I understand AI better than the average person does, but I don't think I understand it on your level, and this is all going right over my head. I don't even understand what they're trying to do here, really. I keep saying sales and marketing, I keep saying platform as a service, I keep saying CRM. I'm not connecting dots. It's just, my brain's not working the right way. Let's see. There we go. Now they're speaking the language. Let's see if we can get in images. I don't want to go into articles. Yep, there you go. So, if it's so long, like ask questions. Yeah, run it by me. I'm definitely interested. It's just my brain isn't connecting the dots. That's all it is. Let me get full screen for y'all. So y'all can see over here. This is Warren Buffett. I listen to a lot of Warren. Listen to a lot of Charles. When you lose 5%, it makes sense. When you lose 5%, you need to make 5% on your existing money to make it back. When you lose 10%, you need to make 11% on your existing money to make it back. Now, when you really think about it, what they're pointing out here is pretty obvious, right? When you lose 10% of $1,000, you're at 900. Now you need to make, if you make 10% back on that 900, you're only at 990. You haven't broken even yet. So you need to make 11% in order to get back to that even $1,000. When you lose 15%, you have to make 18% back, and it just grows exponentially as your loss grows as well. If you lose 50%, now all of a sudden we got to make 100% on our $500 remaining to get back to $1,000. If we lose 90%, well, we need to make 900% back on that remaining $100 to get back to 1,000. That's why Warren Buffett, his number one rule in investing is not to lose money. Like he said, he's got 2 rules, right? 2 rules for investing. Rule number 1, don't lose money. Rule number 2, revert to rule number 1. Don't lose your money. You're not here to gamble. You're here to make your money, right? You need to compound value. So yes, options are high risk, high reward. Way over my head though. I can find a good company. I can find ones that are run well, I think. Better than I could 5 years ago, I'd hope. Obviously, I'm not an expert investor. I'm only 25 years old, so we're working to it. By the time I'm 60, I hope that I can pick great companies. It's just second nature at that point. But we're working towards there. But yeah, I cannot trade for shit. Every time I make options, every time I take options plays out, it never goes the way I think it's going to go. It always starts running a little bit too late. Wait, what are you saying, Brogan? If you're down 17%, you want to do a challenge account, you got to make 1700%. I don't know what your goal is in your challenge account. What are you trying to turn, what are you trying to take and turn it into? I should ask. I'm trying to make very conservative gains over here, and they're not even conservative compared to, most years in the stock market ever leading up to now. Because of how volatile the market is, we can expect these kind of gains on a conservative basis. Well, I'm just trying to double my money in my companies. If I can double the money in every company I get into, great. But there's a lot of plays out there where I can make 500% on it if I get in early enough, which is why I like warrants. If I take it, let's run these numbers for you, right? Let's say I got $1,000. Let's just open a new tab up. Let's say I got $1,000 to start with, and I want to buy a company or a Spac that I just found, like one that we're talking about today. Let's say I want to buy one. The Spac costs $10.74. The warrants cost $1.40. Or I'll give you a real one. The Spac was at 10.02. Warrants were at $1.40. What a warrant lets me do is I can buy the shares outright, and always look at the terms of the deal. Some companies it's different for them, but for the ones I buy, I can buy the share outright for $11.50 more in addition to this $1.40 I pay. Let's turn this into money. Now that's going to get me. It's going to equal that divided by that. This is not going to be that. I want general accounting. I want just numbers. I can buy 99.8 shares of that. Now, same thing goes over here. Set that equal to this divided by $1.40, $1,000. That's going to get us 714 shares, right? 714 warrants. I have the right to. I have the right to 714 shares when it's all said and done. Yeah, so that's, you can buy way more equity for that same amount of buying power. Now let's see what happens when this stock price grows to $20, right? Well, in order to double this, you need to get it to 20.04. The warrants are typically going to trail $2 to $3 behind that, that plus the share price. So $11.50 plus your warrant, it's going to equal about $2 to $3 behind here. Let's see if that's at 18.04, and let's see if that's at 17.04, what we're looking at for returns. 17.04. Let's see how I want to format this. Got to subtract our 11.50 from there. So it's going to equal this minus 11.50, 6.54. Let's take this one over here now, minus our 11.50. This you don't subtract anything. Our return over here. Let's do return at 20.04. You're looking at, shit, how do you get it? It's 20.04. 20.04 minus our start price. I'm trying to put this in here as well. Shit. Sorry, folks. Alright, so we're going to take this, the results of this, and we're going to divide that by D2 again. Yikes. Okay. So let's just take this, divide it by that, and divide it by 10.02. What the hell? Oh, sorry. B2 divided by B2. No, this is a percentage. That's a 100% return, right? Now let's go ahead and look at our returns over here at these prices. We paid this. So we're going to do the same formula. You take your new price, 654, subtract it with this. Let's put these in parentheses. take that result and we're going to divide it by B3 also. Oops. B3. Boom, we got a 367% return. Now let's go over here. Let's look at it. What is that? 554. Same exact formula. What's this? I keep forgetting to put in parentheses. Subtract it by B3. And then let's go ahead and divide that all by B3. So you're looking at, for the same price movement over here, folks, this is what I'm trying to teach you. Same price movement, it goes from 1002 to 2004. That's how we get our 100% return over here. If you buy it at the same time over here, you pay $1.40 for a warrant instead for the right to own the share outright for $11.50 more. Total share price at the end of the day would be $12.90. You know, if you want to redeem it, if you just want to play the warrant game and just lever up and sell and move on to the next warrants, you can do that too, which is what I do sometimes as well. But you know, every company I have warrants in right now, I have full intentions of buying all those shares outright as well. So, you know, we'll see at that point. But so far, my returns are pretty solid on them. And these companies I'm buying into, what I've seen so far is they're running from anywhere from 30 to, you know, I think the highest Spac I've gotten into so far is run up to $45 before coming back down to, you know, reality. So what does price movement look like at that scale? Well, it's going to grow exponentially as well. Let's say that price moves down to, what do you need to do to 3x your money? You need to get a 30.06, right? 30.06. Let's say that this goes like it usually does. We'll do 28.06. We'll do 27.06. Give us a little range over here as to what we can expect. And then we're going to take this. Let's subtract 1150. Warrants are going to equal that. Let's go ahead and do the same thing over here. Let's subtract 1150 from that one. And now let's look at what that does for our return. Let's go over here. Return at 30.06. You're going to get a 200% return over here. Equals, oops, B2. I'm sorry, no. It's going to equal A9 minus B2. Let's divide that by B2. Gives us our return. Put these bullets out a little bit further. And now let's look over here what this does for us. It's going to equal new price, which is that, minus our starting price, which is that, and divided by our starting price again. Gives us a 1000% return over there. And then let's take our new price again, subtract our starting price, and divide it by our starting price. That's how you find your percent return, folks. You're looking at a 1000% return for what would typically net you a 200% return. What makes sense to you folks, right? I want these numbers for the sake of levering my money up, limiting my risk. $1.40 versus 10.02. Getting more equity if I want to. So for $1,000 I can get almost 100 shares, or I can get 714 warrants. And I can turn that $1,000 into $3,000 here, or I can turn that $1,000 into $11,000 over here. You tell me what sounds better, right? So that's the name of my warrant game. I'll make a video on this for y'all, so you can watch it at your leisure. Just kind of breaking down what warrants are for you. I like to think of them like down payments, though. So let me know if that makes sense for y'all. This is like the way I can visualize it. And otherwise, I'm just throwing a bunch of numbers and just overwhelms people. Oops. Do that. Okay. All right, let me catch up in the chat. $1K to 100, $1K to $1 million, 2 years with an Autobot. The math checks out. I like that. So we'll sign those, but DD, low, and Savvy seem interested in, and invest if you like it, because they're usually right. Savvy's better than I am. You know, Savvy's an absolute animal. Y'all gotta give this man credit. They do not just call anybody Savvy Money Show. He earned that name. That dude's always preaching, because he's 6 hours ahead of us, because he's in the UK, so I'll wake up at like 6 a.m. and Savvy's just been firing off since like 1 in the morning of just like, and then we go to one that and that, and he's walking you guys through all of his plays, and they make sense to me. But I appreciate that, Brogan. Thank you. You get in the company, Sworn, you don't mind holding long-term multiple. Oops. I'll take out my initial investment. If it goes down, I believe in the company. I average down if you have to look at it. What has gone down? Has anything changed? Market weakness. 99% this right now. Brogan, I completely agree. Everyone's liquidating, pumping, and selling all day, every day. Super liquid market. Liquid is good though. Liquid creates volatility. Volatility is how you create a transformation of wealth. You need, you get new wealth in the market because of volatility. Inflation. Inflation is healthy right now. Yeah, warrants are the best way to play Spacs. Yes, Savvy does hold an overnight game down. That is gang down. That is the best way to put it. Let me go ahead and I'm gonna move this on over here. We call it understanding warrants. Let's do share price. Let's do warrant price. I'll have to clean this sheet up, but I was trying to do this on the fly for y'all. Yeah, so that's warrants, guys. Let's go find some Spacs, though, shall we? That's warrants. This is why you don't want to lose money in the market. The reason I don't trade options anymore is I spent a lot of time trading, watching the market all day long, every single day. Spent 5 or 6 good weeks of good solid trades that were put in there with good companies. And I watched my portfolio grow and grow, and I got I was up at 200% like portfolio wide in that time. So this is easy. Why doesn't everyone do this? And then you have 1 or 2 red weeks, and y'all just saw what happens in a market correction. We didn't even have a crash here, folks. If we have a crash, y'all, I mean myself included, we're screwed if we're playing the volatility game here. The reason I love investing in these companies is because even if the market crashes tomorrow, Warren always says, I'm going to talk about him as my best friend because he is. Warren always says, time in the market is more important than timing the market. You can't time the market. Everyone who tries to, you're going to spend for every one time you're right, you're going to be wrong 9 times, and you're either going to end up leaving money on the table, like a lot of it, or you're going to end up losing money. If you're trying to play the put game, or you're trying to sell calls, or whatever, however you're trying to time it, you're going to lose more often than not. And being right one time is not going to make it worthwhile for you. So, leaving your money in the market is going to make it grow. If you watch the S&P 500 throughout the country's history, even after the crashes, it just goes straight up like this. You're going to have your correction periods, and then you're going to go straight up, right? And you're going to have a crash or a recession or whatever. After the 2008 recession, it took 4 years for the market to get back. After this past recession, and I don't even want to consider it a recession, although it might be, looked at that way, with the pandemic, it took us, less than a year to get back to where we were. So yeah, your money being left in the market, you don't want to panic sell when you sell down here because you're not in good companies or, you're scared. That money will be there eventually if you're in a good company or your company's going to go bankrupt. If you're in bad companies, those companies might not be around after a market crash, right? So that's why I'm very picky about what companies I want to take ownership of. That's what these shares are, the little pieces of ownership. That's going to go in my bag. I've got 5 that I'm very confident in right now, that if the market crashed tomorrow, I wouldn't really give a shit because those companies are going to be fine 5 years from now. Those companies are going to be fine 10 years from now. My money is going to be worth way more in 10 years in those companies than it will be, in most other companies that aren't run well or than it will be today. Yeah, that's the investing philosophy. Leave your money in the market. If you're in good companies, you got nothing to worry about. Those companies aren't going anywhere. That's why people run to Amazon, uh, Microsoft, Disney. Those companies have been around forever. Amazon now, and Tesla, I'd even throw in there. Tesla's very volatile currently, so people aren't really looking at it like that, but that's the general idea, folks. Find companies that are really great companies, like Warren found Coca-Cola, and your money's going to be just fine. If the market crashed tomorrow, 5 years from now, you check back, your money's going to be worth more than it is now, if history proves correct. And as a history major, I will tell you this, more often than not, history does prove correct. All right, what do we want to look into? Sorry, JC, we wanted to do RURNM. Okay. Yep. Well put, Savvy. Yes, Savvy is. Guys, I'm gonna say it one more time. They don't call him Savvy Money Show for no reason. I don't know how to do DV on an ETF. Uranium. Is that what we're looking at, right? I've been hearing a lot of good stuff about uranium lately. I don't understand it well enough myself, honestly, but let's look at the numbers. See if they have any numbers for us to look at. I don't think they do. I don't know what the uranium market looks like. JC, this might be good for you to fill me in on. Or Savvy, or Brogan. Any of y'all who understand uranium better than me, which has got to be literally any of you. Thank you, Savvy. Appreciate it, brother. Yes, yes, yes. Please, please, please. If you have not already, smash that like button. Smash that subscribe button and ring the little bell next to it so that you get notified every single time we drop a new video and every single time we go live and we are making money up in here, which is every single day the stock market's open, folks. NGAC. Why does that sound so familiar? Haven't heard that name in a long time. Oh, XOS? I think I liked that one, if I'm not mistaken. What's the deal with uranium? What's the outlook on that market, Brogan? Brogan. Where is XOS? Did do it the other day. I already passed it up. Yeah. NGAC. Yeah, because Brogan JC is asking me about it. I know nothing about the uranium market. I have no idea what's going to drive value in uranium, what we need it for, really, like anything, anything to do with uranium. If you could fill us in and fill me in even, that'd be great. I'll get smarter with y'all. You're getting smoked with it. Okay, so you're looking at they're the what I liked about them is they're the one full stack uh, EV truck company I kind of see. Um, they got last mile delivery vehicles. That would be like Workhorse, right? That's the one that I've known forever. Um, EV like trucks, like trucks, tractor trailers, utility trucks, so like cherry pickers, cranes, um, dump trucks, EV batteries they make. So you don't need you can make that for yourself, pay yourself. You can sell it to other companies as well. EV charging, and then fleet as a service. I don't really understand, but that's something they had in their presentation. So I do like XOS. I like it more than any of the other EV options of how much it tackles. Um, Valued at 1.4, almost 1.5 billion. After the merger completes and they get their cash, it's going to be valued at just a little under $2 billion. On the 11th, it was trading for 1071, had a market cap of 493 million at that price, and we got a decent chunk of the pie of the company. So the market cap really hadn't moved. It was right above that post-merger equity value. I like to look for a 2 to 3 multiple of this. That's what I consider to be healthy. Anything beyond there, this is all subjective. Probably won't find it anywhere else in the internet. It's just this is how I think of SPACs. When it gets above 2 to 3 times what their equity value is considered, if you agree with it, that's where you start to get a lot of speculative growth priced in there, and that's when you're starting to approach that danger zone of, okay, well, we can grow here, I'm going to make more money in the short term, but we need to start to kind of grow into these pants we're buying, right? So yeah, they're already making $2 million today, so they're not pre-revenue, which is great to see. By 2021, they're supposed to make 13.8 million. By 2023, they're projected to make 1.2 billion. 2025, 5.2 billion. So that was what concerned me also. All right, Brogan. What concerned me with them also is just this hyper aggressive growth rate. I don't know if they're going to really achieve that. Even if they shoot for the stars, they might land upon the moon. We'll see. But it's 2020. That's today until they reach this number in 2025. Let's see if I have notes on any intrinsic value that they offer there, like existing contracts. These are their distribution partners, so they had strong partnerships. They've got strong manufacturing partners. They've got big customers who they already have contracted work with. These are some of their other additional contracted customers. You can see all those customers on slide 17 of their presentation by going to my website. You don't know how to get there. Just follow the link in the description below. It's the first thing. So yeah, a lot of upside that I see. Think they could be a huge winner based on everything they do. Looks like they've got a leg up on their noteworthy competitors. Path to profitability looks very clear as well. And then enterprise value, I thought seemed very conservative compared to their projections. One thing I need to add to that would just be that their growth rate is very, very aggressive. So that's my outlook on the company. Target price here, I don't know what you're looking at. What's going to make this number, $6 billion? That would be my target price, though. All right. All right, let me catch up in the chat again. Let's move away from China, reliance on minerals. We still need uranium. Senators are saying nuclear power is a green play. I've been hearing a lot of murmurs about nuclear power. Because we're 50 years more advanced, but everyone hears nuclear energy, and they start to, you think of Chernobyl. You start to think of these, archaic kind of reactors that there is no fail switch on them. When it fails, there's going to be catastrophe. And that's what we saw with Chernobyl. Also, if any of y'all like history, I do that clubhouse every week. Brogan would love to see you there as well tomorrow. I know you're probably not here right now, actually. Just called Teach Us Something Cool. So we're going to have a bunch of people in there actually this week who are history buffs. On the subject, we're just talking about what caused the fall of Rome. It's not one event. Spoiler, there's a lot to talk on. Um, I'm relearning a lot. I majored in history, but I loved ancient Rome. So that's something that's been requested by quite a few of our listeners. Our audience continues to grow in size every single week. Club is continuing to grow as well. We've got a little under 100 members in the club, which is decently big by clubhouse standards. So if y'all have any interest in listening in on that conversation, we have those conversations every Wednesday at 9 p.m. Central Standard Time. Sorry, Savvy. I know I'm actually posting our last week's episode, though, or discussion on YouTube later today. So you'll be able to see that and kind of listen in and get a gauge as to how we talk on things. Last week was Japan's economy in the 80s, their 3 lost decades since. This week, though, is going to be the fall of, or what caused the fall of Rome. So excited, we're going to have some people who are more credible than myself in the subject, even though I majored in history. There's people who are way sharper, who really zeroed in on Roman history for way more years than I have, for sure. So I know a decent amount. I can definitely keep up with them and moderate a conversation, but I'm looking forward to hearing what they have to say, because that's something that wasn't even touched on nearly enough in any of the Roman history classes I took in college. So yeah, if you're interested in that, let me know. If you need an invite to Clubhouse, I do have a few invites left until they, give me more if they decide I'm worthy of them, so I can, invite a few of you. But yeah, should be a good one. That's tomorrow night at 9 p.m. Central Time. Let me know if you're interested in coming. All right, let me go ahead and I'm also going to be doing, I don't know if any of y'all are laser bag holders. I believe their investor call is on Thursday, so I'm going to try to do a stream of that call. I need to figure out what the time is, though. Make sure that timing is going to line up correctly for us. Oops. Oh, what's going on, Job? How's that workhorse looking, brother? How is workhorse looking, actually? I'm sorry, open door looking. Sorry, we just got done talking about EV. How's that open door looking, my friend? If it's looking anything like mine, it's got to be looking great. Past week, we've gone up from $20 at the end of the day Tuesday. Or, I'm sorry, end of the day Monday. We opened at 20 on Tuesday, and we have climbed. We hit 30 bucks today. So my open door is looking great. How's yours looking, though? Rome was the first civilization that adopted every religion. Smart move until Christianity came. A country of slaves, hearing the poor will inherit the earth. You want workhorse? We'll see what we can do there. Workhorse, I don't know what's going on with them. I know you're banking on a whole lot that, but I think they're a fine company. I don't know how the numbers are going to look in the upcoming earnings, but I think Workhorse is a fine company. I think they're going to be okay. Boom. I love it, Job. I love it. We are going to be living it up on a yacht real soon. All right, let me go find some Spacs for us to hunt. You missed it, Job. I got no interest in eToro. That is a fucking disgusting company. With a disgusting investor presentation, with a disgusting valuation that makes no sense at all. And I think a lot of people are going to lose a lot of money investing in that company. ACND. Who are they merging with? This could be one that really hasn't won yet. Let's see what they're merging though. It says they got a DA. Beacon Street, okay. Let's take a look at that. Put my glasses on. Future too bright, I need my shades on. I need to find like an interactive game that I can have y'all play while I'm researching. So many times I'm just diving deep in here. Could be something going on the screen that can entertain y'all while I can't entertain. It's poor is being a piss poor host, honestly. You gotta entertain your guests. Ajax. I think I have done Ajax. Not positive. Let me go ahead and take a look. I don't know if they're on the sheet. I think I have though in the past. APXT. I think I like Dave Point a lot. Shit. Yeah, I like Dave Point. I'm very bullish on APXT. Um, Job. I don't have him in my bag. You know, I'm super picky. I just got done explaining how picky I am with my bag before he showed up. But yeah, I don't have them in my bag. I do like them a lot, but I have to really, really like a company. I think that's what makes, you know, I think that, I think Savvy would agree. I think Brogan agrees. You know, whenever I have a company to add to the bag, that usually speaks, you know, volumes about that company. You know, that's the most recent one right here is RMGB. But I don't throw just anything in that bag. Even the companies I like, I'm okay with people making money. I want those companies to stay alive, so when I have more money, I can add them in my bag maybe. But you know, I have not done Ajax on here. I can take a look at them though as well. Let me do that one next for you, Savvy. This one's gonna be ACND. Let me bring this over here. What do they do? Looks like satellites, maybe? No. Although I should warn y'all, based on what I just said, I am still not a financial advisor. Please, 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 anything you see me bring up, if it catches your attention, do your own research. You know, I'm publishing this publicly for y'all to be able to look at, you know, save y'all a whole lot of time doing the research, but, you know, do more research beyond that before you make any investment decisions. I cannot make any investment decisions for you. I'm not legally allowed to, not legally qualified to. Um, but I'm here, you know, we're trying to grow together. That's the purpose of my company, Growth Saloon. That's why I started it, as I'm trying to create a community over here where we can all, you know, I think all of us are very, very talented people, right? I think all of us are very, very smart people, if we can create a community of people who are just gonna, work together to bring each other up in any way possible, I think that's gonna be a very, very strong community that's worth being a part of. So that's the point of, Growth Saloon. Um, Anyone's ever seen the show Cheers? I used to watch that all the time growing up. It's a place where everybody knows your name. Slogan here, the mantra is, it's a place where you're going to come for the growth and you're going to stay for the company. Obviously, it's got many meanings there, but that's the goal here, right? That's our mission. All right, I'm trying to figure out what the hell this company does. Hmm. That's Beacon Street. Is this in the same company? Hmm. Let's see, a collection of dynamic companies offering our customers a diverse and comprehensive portfolio of independent investment recommendations, strategies, and tools across 12 customer-facing brands. We are a leading content and technology platform. Um, what do they call them? Financial wellness solutions. Let's put it. Oh shit! What did I just do? Go put it in their words. $191 billion TAM. Rather than me go look for that later, let's just put that in here now. 191 billion. Okay, let's go look at our transaction summary. There we go. Trying to understand their terms. I got it. Okay. So our enterprise value is this. Our equity value is going to be this, just slightly above there. Because you don't usually see the numbers that close, but it means they're going to be using part of this to pay off debt. So that's okay. They're adding 150 million to their balance sheet from that as well. So that's good. All right, let's see what we're getting. ACND shareholders are going to get 13%. Oops, this is on the 16th as well. Let's put this in here, 13% and 2.3%. Let's see what we're trading at today. And we're trading under 10 bucks, so this number is going to be very attractive if you like the company, if I had to guess. 9.94 is what we're trading at right now. Because this closed at 9.93, has not run. Market cap is 432 million, 120,000. It's going to give us a post-merger adjusted market cap of $2.8 billion, which as you can see is below the enterprise value and is below the equity value of the company after this merger completes. So if you agree with the value of this company, once we see the rest of the numbers, this could be a very attractive opportunity. That's why we go Spac hunting. You know, while everyone is all preoccupied with these shiny objects floating around this landscape today, there's a lot of them. It's easy to get distracted. We're going to go find the ones they aren't talking about yet, because as soon as they do start talking about them, look at what happens to those companies. And if we find good companies as well and we get it at a fair price, we don't have to worry about a market crash. Our money's going to be fine 5 years from now. We don't have to even think twice about pulling our money out. Let it sit. We're not timing this market. We're not selling for losses. We're finding great companies. We're sticking with those companies through thick and thin, and we're going to get rewarded beautifully for it. So they got decent adoption. They got over 9.5 million subscribers that are on the free plan. They got almost 1 million subscribers who are paying every month. Annual revenue. I don't even know what their ARPU stands for. Their revenue though. They are currently turning profit. That is definitely worth noting. A lot of these companies are not. If they're making revenue, a lot of these companies are not profitable yet. So let's look at their 20. We'll go for 2020 actual. And define projections also. Okay, where are we going to grow to? Telling me it was growth to 2022. That's not necessarily a bad thing. Let's go see if we can find one that goes a little bit further out. I'm gonna check this company out after the stream too. This looks like, I mean, it sounds like a pretty awesome idea, a pretty awesome model, and a place where you can learn a lot if it's as advertised. Okay, so these numbers, actually 2020 is an estimate. Let me change this. 272. 2019. Or 2021, or 2020, 2021, 2022. What does this give us for a CAGR? I don't want it from there to there. I want it from 2019. So we'll go find our own. We're going to do 272.2. We're going to 651.2 from 21 to 3 years. Let's go see if we got any competitors. Don't like that I don't see their competitors. Oh, wait, okay. Okay, so we gotta find their competitors together. All part of the Spac hunt, folks. thing. No, this is Trouble in the Neighborhood. Trouble. That's what you're getting now. Trouble. Unless you have another name you prefer, I call you. I'm gonna stick to the 2 syllables. So Trouble, we are going over ACND. They are trading at under $10. They just recently announced, beginning of this month, a merger target of Beacon Street. Looks like a pretty dope company from what I've seen so far, which is profitable. I don't know if I necessarily agree with the enterprise value of it yet. I'm trying to find their competitors. Let's see, Beacon Street Services competitors. But it looks like it could be a good opportunity. Competitors. See, I don't agree with these competitors. This is them. I don't think this is right. Okay, let's see if we can find any partners. Hmm. think it's a good company, guys. I don't know. I don't know what these are. Yeah, I think it's a strong company. I like the stock. I don't know if I'll get into it, but let's do this. We're trying to make that one-stop shop for financial literacy, and I think that's brilliant. You know, that's something that it's so hard to learn this stuff unless you go to business school, unless you know work at a firm, unless you've spent years doing this. Like even to get where I am, which is I'm just scratching the surface really. It's taken me a lot of YouTube videos, a lot of reading, a lot of practice to get to my knowledge to level it's at right now. And there's a lot of wasted watch time, reading, and whatnot as well in that process. So it's like if you can create something that just got everything centralized like they do, I think you're primed to make a shit ton of money. Hmm, I like them. Let me go bring this over here really quick. This is gonna be there's probably a lot of sell limits on their job. It's all right. Just a reminder as to what our shares are worth today. It is fun looking at the portfolio and seeing it climb, though. I will admit to that. Let me go see what other services they offer, and then we can move on. Tradesmith. You didn't miss anything, JC. I don't know anything about uranium. I was trying to get Brogan and Savvy to maybe fill us in with some of their knowledge because I'm not the right person to ask there, unfortunately. Yeah, my uranium knowledge is super minimal, so I don't like to lead anyone in the wrong direction and speak on things that I don't know about. Um, you know, I don't want to be the reason that anyone loses money. And, I don't really care to be the reason anyone makes money if I'm speaking, out of my ass. Yeah, I wish I could be of more help. I'll have to look into uranium and study up on it when I have some time this week. I need to continue touching up on my Roman history though later today, just so I can lead a healthy conversation that actually has value. And I'm not talking on my ass. That's my least favorite thing that people do is talk out of their ass on stuff that they don't know anything about. What else do I want to say about this company? Yes, our valuation is $3 billion. Mm, Um, all right, there are my notes on the company. All right. Let me see. I think I may have done it. I think Ajax sounds very familiar, Savvy, and we're not going to have time to really take a deep dive into it. So I want to either save it for tomorrow. Um, let's see. Do they have a target savvy, Ajax? This is some of the people that are talking about shit that they don't understand. Right here. I just talked about people talking out of their ass. It's like my biggest pet peeve. This is just not true at all. The standard for founders shares is 20%, but this management team is only taking 10%. This one's taking 0%. This one's taking 50%. This one's taking 25%. This one's taking 30%. Like you can see, that's not a standard. That's not even a consistency. This one's taking 10% over here. This one's taking, like, compared to what we're getting in our shares is what they're saying. So this one's taking 0%. This one's taking, no, they're comparing these two numbers against each other. They said that the industry standard for SPACs is that the founder shares or the sponsor shares are going to be 20% of whatever the SPAC holders are getting as well. That's just not the truth. They said that this one's only taking 10%. I mean, we'll see. They're trading with they're merging with Kazoo, Savvy. Now, is this rumored or has it been announced? Okay. So we might need to wait for that announcement, just because I'm not going to look at an investor presentation until we have that. We need to know the terms of the deal. Um, Hmm. Yeah, I think we might be SOL today, Savvy. Keep an eye out. As soon as that does get announced, bring it to my attention so I can actually do a deep dive into it with y'all, and we can see, what the terms of the deal are, what they're being valued at, what they're bringing in revenue-wise, where the projections take them. I'm not reading a lot of good things on here, but this is all just people chiming in on stuff. So, keep an eye out though. All right. Yeah, that's about all the time we've got today, folks. I'll be back again tomorrow, same time. I'm either going to be doing 11 a.m. That's what I'm trying to get on here at the latest. Or actually tomorrow, I think I've got. No, I should be on here. I'll let you guys know. I think it's next Wednesday. I've got something coming up. We're going to do an afternoon session, but I'll be on here at some point regardless. Tomorrow I should be on here at 11 o'clock, though, Central Time. Try to get on here by 10:30 if at all possible. If I can take care of everything I need to in the morning quick enough, I can get on here at 10:30. But I got to take care of my big boy chores first before I can play for a little bit. So I will see y'all tomorrow. I'll post it in the Discord. If y'all have any questions for me at any point, you can find me at any of the links in the description below. If you want to access the sheet that you see me working on, this will be updated fully on my site later today for $3.99, my favorite price of all time. While supplies last. We'll see when we have to put a paywall on there, but anyone who's in now and makes an account will never have to pay. But yeah, let me know if you have any questions. Contact me on Discord. Contact me on any of the socials below. Let me know if you're interested in joining the clubhouse tomorrow night. We're going to talk about ancient Rome and what caused the fall of it, all the events that caused the fall of it, because it went on for quite some time. Um, and yeah, other than that, I appreciate you as always. If you haven't already, please, please, please like this video, smash that subscribe button, and ring the little bell next to it so you get notified every single time we drop a new video or we go live in here and we're making money up in here, which is every single day the stock market's open, folks. With that being said,